Chapter 7. Dalal Street gets a new big bull. The Bharatiya Janata Party withdrew support to the VP Singh government in the last week of October after Bihar Chief Minister Lalu Prasad Yadav had LK Advani arrested during the Rath Yatra in that state. Although the market moved in a contrary direction, gaining a bit, the Sensex crashed the following January as a war in the Gulf appeared imminent after all diplomatic efforts to persuade Iraq to withdraw from Kuwait had failed. However, one stock was steadily and mysteriously rising through all these market swings, that of Associated Cement Company. The sudden fancy for it stemmed from Harshad's heavy purchases in the stock. I had sourced a sizable chunk of it myself for him, and knew that he was buying whatever ACC shares he could lay his hands on. The stock had more than doubled over the last 6 months, and the bears had lost a packet short selling it on the hunch that it was overvalued. I was among those who had sold the shares short at ₹1,000, thinking they were unlikely to rise further. I was wrong, and ended up squaring my position at ₹1,100, losing more than half the jobbing commission I had made that month. I would try this again a few months later, and the results would be no different. The Gulf War ended in a decisive victory for the Allied forces led by the US, but that did not really perk up the stock market. The crisis had aggravated India's already precarious foreign exchange situation, and there was a risk of the country defaulting on payment obligations. Inflation had climbed to a record 13.6%, and there was a sense of despondency everywhere. The dismal state of finances was public knowledge, and it did not disappoint the market when the Congress party withdrew support to the stopgap Chandrasekhar government in March and called for fresh elections. The market remained comatose in the run-up to the general elections to be held in May 1991 as the prospect of another hung parliament loomed. Rajiv Gandhi's assassination on 21 May was a shock for the stock market, as it had been betting on his return to power and continuing the reforms he had initiated during his stint in power. The market was closed the following day, but held up well when trading resumed on 23 May, with the Sensex closing flat. Any panic having been averted by support from the domestic financial institutions. The market remained in a tight range till the end of May. Most players were expecting the political uncertainty to continue even after the elections, as no party was expected to win a clear majority. Then followed more bad news. Left with barely enough forex reserves to pay for 3 weeks of imports, the Chandrasekhar government had to borrow from International Monetary Fund by pledging its gold reserves. The public was outraged, but this development fully revealed the mess the country was in. Once again, the market did not crack as was widely expected. I learned from the market that Harshad and brokers close to him were buying in a big way. I asked Sharma about it. Bhai feels the government's decision to pledge gold shows it will go to any length to avoid a default. Sharma said, I remained bearish, certain that it would be some time before the new government could get the economy out of the hole it had sunk into. To everybody's surprise, the Congress did well in the second phase of the polls because of a sympathy wave following Rajiv Gandhi's assassination. It managed to form a government with support from some of the smaller parties. The Sensex climbed around 100 points, but the market reaction was still guarded. The party on Dalal Street began after Manmohan Singh's path-breaking budget of 24 July, which signalled India's willingness to open up its economy to the world by lowering import barriers and scrapping the license system for industries. Among other things, the stock market will remember that budget, for was the government's promise to allow FIIs to invest in India. Private players were allowed to set up mutual funds, and the Controller of Capital Issues was proposed to replace by Securities and Exchange Board of India, SEBI, to regulate the stock market and stock exchanges. Over the next month, rampaging bulls lifted the Sensex by over 300 points. The leader of the herd was none other than Harshad himself, who was now known by the nickname Big Bull, a title that had previously belonged to the UTI boss M.J. Fairwani. To justify the absurd valuations that many of his favorite stocks were quoting at, Harshad advocated the replacement cost theory, which held that a stock should not be valued on company's earnings potential, but on the basis of what it would cost to create a similar company. The concept caught on like wildfire in the stock market, sending the prices of even the most inefficient and mismanaged companies shooting through the roof. Even today, Harshad is credited with having come up with the replacement cost theory, but that is not true. He may have propagated it, but it was not his original idea in any way. As I mentioned earlier, my brief stint as a library assistant helped me develop a lifelong love for it. Many years later, when I read the full 1956 debate in the Rajya Sabha over the Securities and Contracts Regulations Act, I came across a passage in which P.D. Hemant Sangha, a member of parliament from West Bengal, had made an interesting argument. He justified the steep rise in the share price of the Indian Iron and Steel Company, saying it was cheaper for a buyer to purchase shares from the open market and take control of the company rather than to incur a much heavier expense setting up a new steel plant. ACC shares had by then climbed to rupees 3,000, having almost doubled since the beginning of the year. The moment Harshad or his associate brokers simply made inquiries about a stock, its price would start rising, even without a single share having been actually purchased. The six-fold rise in ACC over the previous year was proof to the market of what Harshad could do to the fortunes of a stock. Promoters began to seek him out, and he, in turn, would seek out promoters of the company he was interested in. Not all these meetings were fruitful, but sometimes the promoters would leak news of the meeting to the market, hoping to fire up their stock. At other times, Harshad's associate would spread the word, creating the same effect. Chapter 8. Swimming Against the Tide. However bullish the overall sentiment, the market could not keep on rising indefinitely, and for all its logic, even the replacement cost theory had its limitations. The bulls were beginning to tire after a nearly one-sided rally that began in July and lasted up to mid-September, taking the Sensex up from around 1275 to a new peak of 1916. The market then began to flag, and over the next 1 month shed around 200 points. I saw this as a good opportunity to have another go at ACC and recoup my losses of the previous year from short selling the stock. The entire market had been baffled by the spectacular rise in ACC shares, and the short sellers who tried to predict its peak price had to pay dearly. That, however, did not deter the more adventurous from taking up the challenge, but only to meet with a similar fate. The stock had come close to hitting rupees 4,000 in early September, and even the most die-hard supporters of ACC felt it was unlikely to go much higher. Except Harshad. Nimish Shah, a close friend of Harshad's and as much of a bull on the stock as he, sold out at around rupees 3,500 a share. This was a clear sign that the stock was overvalued. What else could it mean when one of the finest investors on the Dalal Street decides to sell out in the face of strong demand for the stock? I told Prakash that there was good money to be made by short selling ACC. A player of Nimish Bhai's stature feels the stock is overvalued. What more do you want? I told Prakash excitedly, but he did not share my enthusiasm. Having seen 2 more Diwalis than you in this trading ring, I can tell you one thing confidently. No matter how big or accomplished a player, nobody can correctly predict the top or bottom of a stock, he said. I still went ahead and short sold the stock at around rupees 3150. Over the next week, the stock gained rupees 100 as the market as a whole started rising again. I met up with Sharma over tea a few days after I had short sold ACC. We discussed many stocks, and towards the end of our conversation, I casually asked him about ACC. The seasoned trader that he was, Sharma could deduce which side of a trade a market player was on from his very tone. You are trying too hard to be indifferent about ACC, which tells me that you are in a spot of bother. In case you have been stupid enough to short sell ACC, my advice to you would be to square immediately, he said with a wry smile. Okay, I will be upfront. I am short on the stock. How high can it go from here? I asked. Bhai says it can go to a level beyond anybody's imagination, Sharma said. And what is that level likely to be? I asked. You seem to be a bit hard of hearing. I just said beyond anybody's imagination, and that holds for me as well. Honestly, Lala, I don't think even Bhai would have expected ACC to come so close to hitting rupees 4,000. And it is very likely he did not know how high it can go from here either, Sharma said. My chat with Sharma made me a bit nervous about my trade, and I regretted having spoken to him. With the stock price showing no signs of weakness, I decided to wait for one more day before squaring up my position. That evening, I went over to Prakash's place at his invitation for. There I met an elderly relative of his, a gentleman in his mid-70s who had been working at a broker's office till 5 years ago. Though not a trader himself, he had many interesting tales to tell. Soon the conversation veered to the bull run in ACC. I asked him if he recollected having seen anything like this during his career in the stock market. Crazy things used to happen in the market even then, he said, after mulling over my question. I remember a similar bull run in the shares of Tata, deferred being classed of shares back then, sometime in the late 1960s. The stock went from rupees 30 to rupees 2500 in a matter of months. A few players were made for life, but far more were bankrupted trying to short sell the stock, he said. The next morning I covered my ACC position at a loss, but I was still lucky considering the stock rallied rupees 300 over the next 3 days after my exit. While the bulls paused for a breather in October, there came another important development in the money market. New government bonds with higher interest rates took the sheen off the older bonds, whose price started to drop. The government bond portfolios of state-owned banks diminished in value. This triggered another round of frenzied trading in government securities by banks, as they tried to tide over the losses that ensued. Again, this passed unnoticed by the stock market, a wide section of which viewed the rise and fall in share prices in isolation. The bull market in shares resumed in January with Harshad's purchase believed to be the driving force. Harshad may have been the biggest buyer in the market, but to say that he was single-handedly forcing the market up was to exaggerate his influence. Again, I am making this observation with the benefit of hindsight.